Hello all dear students. So in this video I will be covering multiple choice questions of topic 1 bookkeeping, chapter Introduction to Bookkeeping. This will definitely help you to revise and understand topic. See, with each question try to first think from your side what's the answer and then check with video. Let's start. See the first one, an art of recording business transactions in the books of accounts. Here 4 options are given: accounting, recording, bookkeeping, writing. Say student, art of recording business transactions. So just recording business transactions means bookkeeping, and accounting is analyzing data, right? So art of recording business transactions in the books of account, answer will be, see what will be the answer? Bookkeeping. Okay. Art of recording business transactions in the books of account is bookkeeping. Then the next one, any institution set up with the aim of making profit. Any institution set up with the aim of making profit. So answer is business. Institution set up with the aim of making profit is a business. See, any legal activity is undertaken by a person with the aim of getting profit is known as business. See here some other options are given like creditor. See what is mean by creditor? Creditor is a person to whom money is owed or payable for goods or services bought from him on credit. So answer will be here business. Institution set up with the aim of making profit is business. Then the next, the money used to start business. The money used to start business is known as. The money used to start business is known as, yes, of course, capital. See, money used by proprietor to start business is known as capital. Like here other options are given like profit. See what is meant by profit? Profit is excess of income over expenses. So that will not be option. Correct option. Other points are given like drawing. Drawing means what? It is an amount of cash or goods taken from business by the proprietor for his or her personal use. So that is also wrong. So here the correct option is capital. Capital is the money used to start the business. Okay, it is an amount invested in the business by its owner. See, it may be in the form of cash, goods, or any other assets which the proprietor invests in the business. Now the fourth point, the buyer of a goods on credit from the business is known as. The buyer of goods on credit from the business is known as. So the customer who is buying goods from the business on credit is known as debtor. So answer option will be A. Answer is debtor, or we can say debtor. Debtor is a person. He is a buyer of goods on credit from the business. So here amount, money is receivable from him. Money is receivable from debtor. So buyer of goods on credit from the business is known as debtor. Here other options are given like D, proprietor. See, proprietor means what? Proprietor is a person who owns a business. He or she invests capital to the business with the intention of course, profit. So here the answer is debtor. Buyer of a goods on credit from the business is known as debtor. Next one, a financial institution which keeps and lends money to people is a bank. Bank is a financial institution which keeps and lends money to the people. Then the next one, sixth one, dash assumes that business, enterprise and its owners are two separate independent entities. See, dash assumes that business, enterprise and its owners are two separate independent entities. See, this we already studied in basic accounting concepts and principles. Like there are different concepts like going concern concept, money measurement concept, business entity concept, historical concept, dual aspect concept, matching concept. So here what is the statement given? Dash assumes that business enterprise and owners are two separate independent entities. So here answer will be business entity concept. Business entity concept, option will be C. Answer is C. Business entity concept assumes that business enterprise and owners are two separate independent entities. See students, if you want to revise all this concept again in detail, I am sharing link in description where already all terms in bookkeeping as well as basic accounting concepts and principles explained in detail. So for better understanding of the concept as well as terms, you can refer the link given in the description. 7th point, money or goods taken from the business for the owner's personal use. Owner's personal, this word is very important. See, money or goods taken from the business for the owner's personal use is known as drawing. When owner is investing something in the business, it is known as capital. And when owner is withdrawing something, taking something from the business for its personal use, it is known as drawing. Next one, the historical concept. The historical cost concept state that all non-current assets are recorded in the books of account at their what will be the answer? At their cost price. At their cost price. The historical cost concept state that all non-current assets are recorded in the books of account at their cost price. See, historical cost concept states that all assets are recorded in the books of account at their purchase price, that is cost price. Like asset like building, furniture are recorded in the books of account at a price paid for them. Okay, that is cost price. 9th one, going concern concept states that every business firm will continue to carry on its activities. Answer will be for an indefinite period, because going concern concept states that a business firm will continue to carry on its activities for an indefinite period. It will not dissolve shortly. Okay, see student, if you want to learn this concept in detail, you can check description. 10th one, the concept that a business enterprise will not be closed. The concept that states that a business enterprise will not be closed down shortly is known as going concern concept. Same again, this concept states that the business has a long life, it will not be dissolved shortly. Okay, that means going concern concept. 11th one, the accounting equation is connected with. This is a very important topic. Assets, liabilities and capital. Accounting equation is connected with assets, liabilities and capital, because what is the equation? Assets, A for asset equal to capital plus liabilities. Assets equal to capital plus liabilities. Okay, so here you can take example like suppose if amount of capital is 40,000 and liability is 10,000, then asset will be 50,000. So accounting equation is connected with asset, liability and capital. So what is the equation? Assets equal to capital plus liabilities. Then the 12th one, as per the business entity assumption, the business is different from as per the business entity concept. See what business entity concept state? It states that the business and its owners are two separate independent entities. Business is different, business account is different from owner's personal account. Okay, so it states that the business and its owners are two separate independent entities. We record in the books of account transactions of the business only and not that of the person who owns the business. So as per this assumption, the business is, it is different from owner. Answer will be owner. Then the 13th one, say again, going concern concept tells us that the life of the business is very long. Okay, very long. We saw that this concept states that the business will continue to carry on its activity for an indefinite period. It will not be dissolved shortly. So it tells that the life of the business is very long. 14th one, as per dual aspect concept, every business transaction has, it's very easy. Dual means what? Two. So every business transaction has two aspects. See, dual aspect assumes that every transaction has a two aspect and each aspect must be recognized and recorded in the books of account. Okay, we give one effect at debit side, another effect at credit side. So every business transaction has two aspect, Next one, 15th, which of the following is not an asset? Which of the following is not an asset? See, asset means what? All properties owned by the business. Here it is given, first one is debtor. Debtor means who? From whom money is receivable. Okay, debtor is a person who owes money to the business for goods or services supplied to him on credit. So if amount is receivable from debtor, we will get money from debtor. So they are our asset. Motor vehicle is also asset, and the D, stock of goods, is also asset. So which of the following is not an asset? So answer is creditor, because creditor is a person to whom money is payable. Okay, money is payable to them. So here creditor are the liabilities. So here what was the question? Which of the following is not an asset? So answer is creditor. Creditor is not an asset. Next, which of the following is liability? Which of the following is liability? See, here options are given. A is cash balance. Cash balance is of course asset. Debtor is also asset. Building also asset. So loan from J. Orinda is liability. Okay. Then the next one, which of the following statement is incorrect? Which are the statement given? See, first one, assets minus liability is capital. See, we saw in the previous transactions, we saw the equation asset equal to capital plus liability. Okay, so asset equal to capital plus liability. So the first option is also correct. Assets minus liability is capital. Assets equal to capital plus liability is also correct. Assets minus capital is equal to liability is also correct. So which of the following statement is incorrect? So incorrect option is capital minus liability equal to asset. Capital minus liability is asset. So answer is B. So what will be answer? Answer is B. Next, which of the following is incorrect? Which of the following is incorrect? See here, when we solve with the equation, what is the equation? Asset equal to capital plus liability. So assets should be equal to capital plus liability. So when we solve this for in the A1 2680 plus 6780, it becomes 9460. So first one is correct. Second one 1140 plus 6250 equal to 7390, it is also correct. Now C is given, liability is 2490 and capital is 4630. When we total this, we get not 6120 but answer come as 7120. 4630 plus, as per the equation, capital plus liability should be equal to asset. But when we make total of 4630 plus 2490, we are not getting 6120 but we are getting 7120. So this statement is incorrect. So answer is C. Now next one, surplus of income over expenses. Surplus of income over expenses. So what will be the answer? Answer will be profit. So answer is profit, because profit means what? Excess of income over expenses. Like suppose income is 1000 and expenses is 700. So profit will be 300. So excess of income over expenses is profit. Next 20, amount which is not recoverable from customer is. Amount which is not recoverable from customer is known as bad debts. Next, dash means a reputation of a business valued in terms of money. So here answer will be goodwill. See, goodwill means a reputation of a business. It is valued in terms of money. A commodity in which a trader deals is known as goods. For example, for a trader who deals in a furniture, for them furniture is a goods. For a trader who deals in a computer, for them computer will be goods. So a commodity in which a trader deals is known as goods. Bookkeeping and accounting are one and the same thing. Bookkeeping and accounting are one and the same thing. Is it true? No, it is false, because bookkeeping and accounting is not the same thing. There is a difference between bookkeeping and accounting. See, bookkeeping is a part of accounting which deals with only recording business transactions. Bookkeeping means recording, but accounting is analytical in nature. It analyzes accounting data. Bookkeeping is the primary stage of maintaining books of account, but accounting is the secondary stage of maintaining books of account. Accounting starts where bookkeeping ends. Okay, bookkeeping, the task of bookkeeping are performed by junior staff, by bookkeeper, whereas the task of accounting are performed by senior staff, by accountant. Okay, so bookkeeping and accounting are not one and the same. So here statement is false. Now 24th, conservatism means to follow safe side. This is also one of the accounting principle. Conservatism means to follow safe side. So answer is true. So conservatism concept tells while recording business transactions we have to anticipate no profit but provide for all possible losses. Don't anticipate profit, that might be profit and just writing in account book, but you have to provide for all possible losses but not for all possible profit. See, the income statement may show lower income and balance sheet overstate liability and understate assets. This policy of recording is asking accountant to play safe while writing accounting. For example, suppose closing stock in a factory valued at 25,000 at cost price and market price is 35,000. So while recording in the books, value of 25,000 will be considered, being the lowest of all, and not 35,000. So it is like playing safe. So statement is true. Then the double entry system is based on a dual aspect concept. Yes, answer is true. Double entry entry system is based on two aspects, debit, credit. Every transaction has two aspects, so it is based on dual aspect. Bank overdraft is an asset of the business. So no, it is not an asset. See, bank balance is an asset, but if there is a bank overdraft, that is money withdrawn more than the balance in the bank account, so it is known as bank overdraft. This facility is available to current account holder. So it is not an asset, but it is a liability. That amount is payable to the bank with, of course, interest. So bank overdraft is not an asset, but it is a liability. So this statement is false. Solvent person is a person whose assets are more than his liability. Assets are more than liability. So statement is true. See, when assets are more than liability, that person is known as solvent. And if liabilities are more than assets, that person is known as insolvent. Next, bookkeeping and accounting are one and the same. So no, bookkeeping and accounting are not one and the same. So this is false. The amount which the proprietor has invested in the business. So it is, we already discussed this point. The amount which the proprietor has invested in the business is known as capital, and the amount which proprietor withdraw for its personal use is known as drawing. A person to whom business owes money for the goods or services is known as, or we can say a person to whom amount is payable, so he is known as creditor. Okay, he is the person from whom business buying something on credit, brought something on credit, so now amount is payable to them. Okay, a person, they are the person to whom business owes money for the goods or services, they are known as creditor. Surplus of expenses over income, surplus of expenses over income is known as, so it is known as loss, because loss is excess of expenses over income. It occurs as a result of selling goods or services for less than the cost. And the next one, the amount of cash or value of goods, assets, etc. withdrawn from the business by the owner for personal use is known as drawing. Excess of asset over liability, this we discussed in this equation. Excess of assets over liabilities is known as, it is known as capital. See that, or the total amount invested into the business by the owner is called capital. What is the equation? Assets equal to capital plus liability. So excess of assets over liability. So assets, this liability go left side, so assets minus liability equal to capital. So excess of assets over liability is known as capital. So students, here we discussed some of the MCQ question from chapter 1. You can subscribe the channel and press bell icon, because we will be going to discuss MCQ of all chapter for account as well as commerce, as well as we also discuss the theory and some practical problems. Okay, thank you.